I just hit my foot. All right, where was I? Okay, so here we could see. Okay. So here, for example, you see how price just flew right through our little zone that we had marked here? Price just flew right through it. So it didn't give me the bearish price action that I was looking for. So I'm not just going to enter the trade. So now we can just see what price does. Let's just take a look. Oh, so here I see. Okay, I see that. All right, so hold on. Let's just keep going. I need to see something. I'm trying to see where I would have entered this trade if I do get an entry or not. Right here already, this pattern, can anybody tell me what this pattern is? I just want to see if it falls through or not. I really like when price does it at its own. There is no one else. What? Oh, did somebody say the answer for me?
Is it head and shoulders?
No. So it's not a head and shoulders. A head and shoulders is like a pattern created with like a bunch of other candles. This is it's not I shouldn't say pattern then. I should say a different word. What price action that is. I don't actually use Forex patterns to trade. I'm a big price action trader. So does anybody know the name of this price action?
Which one?
We learned it in the price action training.
American price action?
It's called an evening star. It's with a nice large candle with a little doji in the middle with another candle that matches the same length. It's called an evening star. That's your bearish price action right there. And then when it's the other way, it's called a morning star because it's going up. I just remember that because it's morning and evening. So yeah, so this would have been a great entry right here. After this candle form, you could have entered this trade. But either way, your stop loss would have still been at the top here, okay? And now you're capitalizing on the market after you enter. So I would have entered this trade right after I saw that. Right after I saw this form. Because it's still respecting my zone. It's doing it at my zone. Because you can tell here that the market is a little bit off, which is fine. That happens a lot in the market. It's never going to be 100% precise, which is why you want to use price action. This is why you want to know your price action. So for whoever said head and shoulders, definitely study your price action candlestick so you can know what price action is being formed. So that would have been my cue. This whole entire thing would have been my cue to enter this trade. Okay. There's so many ways you could have entered this trade off of this this evening star, or after you saw this candlestick right here. Any of these really, they're creating the same exact pattern. 2 evening stars right here. That's exactly what they're doing. So yeah, all this would have been perfect to enter the trade. And this is why also I want to challenge everyone to do so. Start tonight and write out a trading journal for yourself. Okay, like get a little sheet of paper, whatever you need to do, and get a sheet of paper and create a trading journal for yourself. At the top, you're gonna write what pair you traded, what session or whatever time. You have to put the session. You could just put the time, because if you put the time, you'll know it's session. Oh my God. And then, sorry. And then your the next column is going to be, why did you enter this trade? So you're going to write down what made you enter this trade. I would write, I saw that price created a evening star, which is bearish price action. We're in a sell, we're in a downtrend, so I'm only looking for bearish price action, and it happened right at my zone. So that would have been my reasoning for getting into the trade. If the trade goes wrong, I can look back and say, well, I entered this trade based off of my rules, so there's no reason for me to be upset. Okay? So I want everybody to do that. Create a trading journal for yourself, and you write down every trade that you're inputting. If you're entering too many trades on a day to write them down, then you are trading the absolute wrong way. You should not be entering 20 trades a day. You literally only need to enter about 2 to 3, not even. But that should be the max at that per day if you do get into trades. It should not be, you shouldn't even be trading the same pair 50 times, meaning that you're getting out, exiting, and getting out and exiting. That just completely messages up your leverage. If you don't know, the more time you press, the more time that you enter a trade, your leverage is going further down and down and down, especially if you're not making money off those trades. So now I would have entered here, okay? So now on one trade in 1 week, guys, we're in this trade now. We're still in the trade. We still have not closed it out. We didn't close this trade out because it never once broke market structure. And this right here, guys, is what's going to give you so much time freedom. Like when I tell you, I don't look at my charts. Like sometimes I'd be like, dang, I feel bad that I'm not looking at my charts. But I'm like, why would I feel bad? Cody and Easton taught me how to do this so that I can have time freedom like they have time freedom. I'm like, what the heck? I marked up my charts. I did what I need to do. I'm set. Like I don't need to be staring at my charts. It's just because I remember when I was once at that point in my life where I was at my charts 24/7. One, because I was studying a lot and I wanted to be on my charts to familiarize myself with patterns and things like that. And also because I was just a slave to the charts. And I was like, this is not the right way. I was like, I don't want to do this. So that's when I really took market structure a lot serious and started holding my trades based off of market structure. So look, guys, we're still in this first trade, right? So we're up about 100 and we're up about 279 pips. 279 pips, y'all. Okay, that's one trade still. Then our second position, which we entered here, we're up about 150 pips. So that was 290 plus 150. So that's like what is that, y'all? 290. So that's another 100 is 390. So you're at like a 450 pips, y'all, on one trade in that same week. This is how I traded Euro USD all week. I didn't trade no other pair but Euro USD, and I was in EN too. But that was a real quick quick pip and dip. It was like 40 pips. But for EU, I held that thing. Okay, so so then now you're up 450 pips on one trade that you didn't even have to stare at. All you did was wait for it to respect market structure, and you entered the trade based off of price action. Like that is all you did just now. Okay, so now price officially broke through this last low. So now we're going to move our structure zone down. We're going to move our structure zone to this swing high here, and we're going to move these down here. Okay, all right, so now your stop loss gets moved down here. So now this trade that you entered, you're up all these pips. You're up 100 and, like we said, 167 pips on trade one, and then you're up 150 pips on trade two. So you're up 450. Okay. If my math, I know my math is wrong, but we're just rounding right now. Okay, let's just round. So we're up about 450 pips now. So we're still holding this trade. I can delete these now because now these are no longer relevant because it already happened. Okay. So now, okay, what am I telling myself now, guys? Okay, I want somebody to answer that. What are we looking at now? What am I telling myself? Or what would you be telling yourself?
I would be asking myself what is about to happen next.
Exactly. What is about to happen now? We have impulse, pullback, impulse, pullback, impulse. Now, what happens after an impulse?
Pullback.
Exactly. Where will price potentially pull back to now?
Right above that zone there, the two lines, the yellow lines, possibly, or all the way up to our zone right there.
Exactly. So now that is you. Now that is correct. Price can either pull back here or price can either pull back here. Okay? We want to see bearish price action either here or here. And the thing about this now is that now you're in a now your trade is in a win-win trade, because look guys, remember, we entered up here. So this means that if price does end up pulling back and breaking through your zone, you still ended this trade in profit. And this one you pretty much closed even. But let's keep going. For your first trade, if you wanted to, you could close it out and keep your second trade running, just because you could capitalize on as many pips as possible. So like I said, that would have been your 112 pips or so. But let's see what price does. Sorry. Okay, I see exactly what this did. So this one, this one actually, it did a counter trend line break. So with this counter trend line break, it was very, very solid. It gave a counter trend line break, and it also gave this nice bearish price action right here at the zone. This would have been my go-to to sell this trade because it broke my counter trend line. If you were to go on a lower time frame, not to confuse you guys, but I look at everything in the market. I be looking at everything. Like, honestly, that's what I do. Well, because I spent a lot of time studying. I spent months of studying for hours a day. So to think about like how much time I actually put into studying, it's crazy. I don't know. It's got to be a whole bunch.
I have another question, Kay.
Go for it.
Okay, so say if, at first we was in the uptrend, like the market, we was in the uptrend, and then we have a market like reversal and is in the downtrend. And when we're trying to like set the levels, do we have to? Does it matter how far we go back to see? Okay, when was it going down? So we could put the level right there. If I'm making.
No, I kind of understand what your question is. So let me find an uptrend. Okay, we could use this. Okay, so what are you saying now? So you're trying to say like if we were in a downtrend that turned into an uptrend? Something like that? Natalia, are you still here? It says your microphone is unmuted, but I don't hear you. Where's my computer charger? My computer's dying. Natalia, I can't hear you, girl. Wait, maybe I turned my computer down. No, it's still up. Oh, did she get off? Oh, I don't know. Hold on, I gotta put my laptop up really quickly. Okay. Well, whenever her microphone gets back, she can ask because I don't.
Okay, I'm here.
Okay. Okay. Hello?
Yeah.
Okay, yeah. So what were you saying?
I was saying because sometimes I struggle when I'm looking to the left, you're not gonna see like anything down because it was like it was bullish at first. So does it really matter how far we go back to get that level to see when I guess
like
the bear market is over?
Oh, that's what you're saying. Oh, yeah. You can either do it that way or you can just do it based off of if it breaks that structural zone. So I get exactly what you're saying for like this, for example, where like it had this full downtrend and like this was the cutoff and then it started going up.
Yeah.
That's what you're saying. So like say for example, you were like here and you didn't realize that this was going to be like the cutoff point and it's going to start going bullish, right?
Correct.
So you just do it based off of market structure. So say you've been in this trade since here. You were in here on all these different market structural points. Okay? So you're in this trade, holding this trade, entering on every single market structure entry, right? and then the market decides to start. This is the market structure point right here. This was the last swing high, right? So all these trades are in massive profits, and this one's not in much profits, just a little bit, right? And then finally,
Right.
what happens? Because right now you're telling yourself, okay, price is probably just pulling back to here, and then it could drop again, but we don't know. And then we wait for price to give us the confirmation to tell us that our structural zone is officially broken.
Right.
So
Okay.
I'm just going to play this so that we could see what it does. So yeah, Cody Easton trades straight market structure. Like, they don't trade to say like, this is my bias when it's going to change on me. They trade based off of market structure. So if they've already entered the trade here and entered the trade here and even entered the trade here, they're still into this. They're still into the sell until it breaks the most relevant market structure. So like, I would still be in the sell because I still don't have a full break yet. Does that make sense?
Yeah.
So I'm still holding my sell because it's still not a full break. Bam, look at that. Look at that. This is why I would still be holding my sell though. But then,
Okay.
oh, price broke out of that and retested. Ooh, that was a nasty one. Okay, yeah, that was a, oh no, it was, yeah, it was. Anyways, this is still my structural point. So I'm still in this. I'm still in the sell. Okay? Still in the sell. Until I get told otherwise to get out of my sell. Oh my gosh. Can you move a little faster, please? Okay, bam. There was the full breakout candle right here. It was an aggressive candle that completely broke out. These weren't breakout candles because you can see they didn't officially break out of the zone. This is a breakout, a impulsive breakout candle. Once I got this, that would have mean it's time for me to close this trade, and I took an L on this trade. Makes sense?
Yeah, that makes sense.
And that's how you trade. So if I would have entered here, that means I caught 269 pips on that entry, and then I caught 205 pips on this entry, and then wait, what was that? I caught how many on the first one? I caught, somebody do this math for me, 300, okay, plus another 200. So you got 500 pips in profit, right? And then you enter this trade that takes you out of your stop loss once this candle closes, and you lost 100 of those pips. So in total, you made 400 pips, and that's where risk to reward comes in play. Because if you're winning two major trades that you enter with a lot of pips, and you lost a small one of 100 pips, you still made 400 pips there. And if you had that at $1 a pip, that's $400 you just made by holding one pair. And Euro NZD is my favorite pair to swing trade, because when I tell you that market structure be on point, I be getting so many pips with market structure on EN. EN was the first pair that I ever caught 600 pips on. That was a breaking point for me, a breakthrough moment. But I hope you got that down, because that's what market structure comes down to. So this is where market structure ended, guys. My bias is officially changed. I tell myself, okay, I'm no longer looking for sells anymore. We are no longer in the sell. Our bias is completely changed because it broke out of our structural zone up here. Okay? So now, let's see if we get a nice break and retest. Because you could be trading the same pair. This is why they say you can make so much money off of trading one pair. Like when I tell you guys, I've been sticking to the same 3 pairs. I have not been looking at any other pairs because I don't need to. So I could still be trading the same pair. If I made 400 pips out this pair, I'm like, okay, I'm getting for the buy now once I get a clear break and retest. So let's see if it gives us a clear break and retest. Oh my gosh, there it is. There goes the break, and there goes the retest. Bam. There goes the retest, y'all. Do you see it? This is the retest candle right here. Price broke through. Price broke through our zone, and it came right back down to retest it right here. And it retests with this perfect candlestick. This is a nice bullish candlestick. So that's what you're going to be telling yourself. Once price breaks out of this, you're going to tell yourself, now all I'm looking for is for bullish price action now. You don't care about bearish price action anymore because we are now bullish. When price broke out of this, here was the bullish price action that you're looking for right at your zone, right here. Okay? That is what you are looking for. So if you have that, there, your stop loss is supposed to be here, all the way at this last low, which is crazy, very crazy. This is why you want to pick your lot sizes accordingly. And this is why people get afraid of the higher time frame, because they have to have big stop losses. But most of the time it doesn't go there. This is just for cautious purposes so that you're not getting kicked out of your trade and just giving your brokers your money. So right here, I would have entered the trade. That would have been my entry for the bullish trend now. So now I'm entering for a buy. Okay, let's see what it does. Okay, I'm gonna stop this. So now we're doing an uptrend now. So it's gonna be different from a down. It's the same, but we're doing the opposite way now. So now this right here is this is our retest zone, right? Price came in retest. Now all we wanted to do, let me zoom in. Cool. All right. So this was our retest zone right here. Retested perfectly fine. Bang, bang. Let me put it on this little candle. This is where we entered the trade. And now we marked our swing high. We marked where price had started. This is where price started swinging low at. Now we're going to mark that high. Remember, before on the downtrend, we were marking that low that it created with our lines. Now we're going to be marking these little highs that it creates. And don't get confused with the swing lows and swing highs. It's very, very simple once you start like practicing it and identifying them, because it took me, I don't know, maybe like 3 weeks of straight practicing these to actually get it fully down. And I was like, oh, now I see what they're talking about. But then I didn't know about price action. So it was like, okay, I'm just going to enter the trades. And every time price came to my zone, I would just enter. So this is why, like, I am so thankful for my forex journey. And I tell people all the time, you are such losers. I tell people all the time, like, people are such losers for giving up on themselves. Like, I can't stand that. Because I'm like, you know how many times I could have gave up, but I didn't. It was just because I was lacking the information, and it just took time for me to learn it, because you can't learn everything about forex in one day. So you just have to give yourself the credit for learning the little stuff that you're learning each and every day, and the puzzle just comes together. Like, there's no like, I'm not getting this. It's literally time. All that it is time. I think that was the best advice that I ever heard from somebody that told me about forex. They said, all that it takes to be a successful trader is time. Time. But also just studying too. It takes time and studying. You can't just expect a month to go by without studying. You said, well, you said time was going to help me become a successful trader. No, time and studying. Studying is when you study and you put in that time, that's where you start learning it. Because I learned about market structure and I got that, but I didn't know about price action. So I was missing that part. But it took me time to learn that because I needed to go through market structure first before I could move to something else. And that was last year. Like way last year when I started learning all this stuff. So it just takes time because you learn stuff every single day. So now I'm like, okay, we created this impulse pullback, and then this is where we entered, and now it's the continuation. And now what are we looking for after that, guys? Now that we had this pullback and it continued up, what are we looking for now?
Another pullback?
Yes, we are waiting for that pullback. So now this is where we're going to tell ourselves, price can potentially pull back here, or it can pull back to our structure zone and then take off, okay? Because our goal is to get in when price is at one of these zones with some nice price action. Okay, some nice bullish price action. So now we wait and see what it does. Sometimes price takes off further. So for example, you see this example? This was an example where price didn't actually come and hit our zone. You see that? Price did not come and hit our zone. It just took off before it even hit our zone. This is why I use counter trend lines in all my trades too. Because if price doesn't hit your zone, and also, you see how price didn't hit our zone here? So we didn't enter this trade because price didn't hit our zone. This is where you can tweak your entries. So if you start seeing stuff like this happen a lot, you could be like, okay, well, I got to find a different way of entering if price does not hit my zone. But ideally, that's my number one way of entering, when price hits my zones and gives me the price action that I need. So this is why everybody enters different, and you need to find what works for you. Not for me, what works for you. I'm teaching you what works for me, and you can try that. And if it works for you, that's what you use. But if that does not work for you, you can try something else. But this works for me perfectly. I love market structure and waiting for price to hit my zone. But say, for example, this one, price didn't come back down to my zone before it started taking off again. It pulled back a little, and then it started taking off right here. And this is why counter trend lines come into play. I can have a counter trend line coming down. I would do it on a lower time frame so I can actually get precision on what it actually looks like. Maybe like a 1 hour. Bam. It didn't come to our zone, right? Let me show you. You see how it did not come to our zone, but you had this counter trend line here? When price broke that counter trend line and gave you this little retest, you could have entered the trade for the buy then, so that you wouldn't have missed out on these pips. So counter trend lines are always great ways too. I put a counter trend line on all my trades just in case, because of things like this. For every trade I do, I always have one on just to be safe, because this happens sometimes in the market where price doesn't go to your zone that you want it to, and then you miss out on the pips. But 95% of the time it's going to your zone. Does that make sense, guys?
Yeah, that makes sense.
Yep, that's all I would be doing for this. But that's what I want you guys to do. I want you guys to really, really focus on this market structure, because this key. I tell people all the time, like, literally, the moment I learned market structure, that's when my trading really started turning around, because I was actually waiting for those pullbacks to happen and then entering the trades off the pullback. Before, I was not doing that. I was looking at this like, okay, uptrend. Okay, let me pull buy in my account. And that was it. And I was doing all this other stuff. I was doing like a whole bunch of indicators, stuff that just don't help me. Like those MA lines and like I just couldn't do it. Those just don't help me. A market structure was the one thing I could say helped me so much with trading. But guys, like I said, I'm about to get off though. But I want you guys to, if you have not done those price action flashcards, to please do that. Send it in the chart so that you're inspiring other people to get off their butts and put in some work too. Also, don't forget to create your trading journal for yourself. You need to create that trading journal for yourself. And tomorrow we could do the weekly trade forecast after I get home from church and volunteering. So there's that. So the trading journal, the charts, what did I say? The trading journal, the price action, and go back on your charts and practice market structure and post your charts in the chat. Okay, you don't realize that what you're doing by doing that is really, really inspiring like everybody to do work. But guys, I hope you have a great rest of your Saturday. I'm about to go for a walk. Maybe I need to. I think I recorded this. I don't know. Maybe I didn't, to be honest. I don't think I did. Oh, I did. I recorded both sessions, so I will post them on my channel and send it to y'all. So I hope you have a rest of your great Saturday, y'all. Bye. Thanks, Chanel.